Man, it is the end of March. We are flying back to reality. Monday, March Madness. We got a lot to get to on the show. Things settling down in DC. I don't know what to even make of that. We got crypto bars popping up. We got 23andMe filing for bankruptcy. We got Visa and OpenAI with eye scanning orbs. What is going on? The markets have just been tumultuous, but it does feel like it's the Wild West in terms of crypto projects, but they're not calling themselves crypto projects anymore. They're now just ETFs. What's your...
Well, yeah, we touched on this a lot the last few episodes all through March, but the market manipulation that is at hand is not only rampant, but it's also right in the open. And when you think about just a year or two ago, when we're in the middle of this, we're now up at 105 this episode, 105 now. We're heading towards we're 105 today. So that's exciting for all of our listeners. Thank you for being with us.
Grab a drink. It's time for another episode of Off the Record, on the Rocks. Join Michael Toner and Ankarina Lara as we discuss the latest in all things Web3, AI, metaverse, and crypto. Tune out the noise and turn up the signal as we pour ourselves into the future. Better make mine a double.
But you were not allowed to talk about unregistered securities. You were not allowed to talk about derivative or DeFi products. The United States government went out to get you and sometimes fine you or arrest you or all these things and now all the language of all those things have passed are gone. And as you said, all you got to do is put the letters ETF, because that somehow validates, even though the idea might be insane, it validates it within the common rubric of our financial system, that there already are things called ETFs. So, hey, maybe stop calling stuff crypto and these dirty words and just call them ETFs. I think we found that whether they're smarter or dumber winds prevailing, someone somewhere figured out if we steer into the traditional markets, we can basically Trojan horse some of these very exotic products into things that just sound more pedestrian. Shocking.
I think if the first 6 weeks of this new administration, the dropping of all of these cases, the ripple was just last week, feels like it was the last straw to break. And now old Bradley is feeling the deregulation is real. And now here comes this, what feels like even more of a groundswell around this ETF, electronic traded funds or electronic traded products. And they're just alternate investments. They've almost always existed, these derivative projects, these derivative investments that you could go get from Morgan Stanley. And oftentimes, at least in the quick research that I'm hearing, there was a lot of alternative investments around like private equity and private wealth that you could invest in sort of these alternative funds. And now that language, these ETFs, ETPs, electronic traded products, these new derivative products, we've got the Pudgy Penguins entering the chat, filing for an ETF. Now, this is an NFT project. That's a non-fungible token, which is and could have been considered an unregistered security. And now here they are. No, it's not an unregistered security. It's an alternative investment available via Section 13F filing as an ETP, will go for an initial public offering starting shortly. And if the Pudgy Penguins bring that forward, there is no doubt in my mind that Yuga Labs, sitting on a bunch of intellectual property, sitting on what were considered perhaps unregistered securities, and then they got clarity in the last couple of weeks that they are in fact not unregistered securities. I have no doubt you're going to see a wave of this private funding. I mean, Kevin Rose, Moonbirds, these were all the NFT projects, but now they're just going to be real companies, but they're not publicly traded. They're traded as ETFs. It's just a different way, I think, of describing how and what they're going to have to report to the Securities Exchange Commission. You can now fractionalize ownership as an NFT list it as an ETF, and go to the public market and sell equity essentially in your company without having to meet all the other requirements.
But that's the part that we got to just unpack for a second, because I also don't want us to be disingenuous to our audience, because it was just the last episode that myself making the point, the format is no longer what matters, right? It's the content, it's the media. We saw this when we talked about your trip to South by Southwest and all the new stuff coming out of the creator tech space, right? We say that out of one side of our mouth. But then lo and behold, a week passes, and now companies are ramming those acronyms back down our throats. The NFT project, the Pudgy Penguins. And it's important because when you say Pudgy Penguins, the logical thing you would say, if it's going to be a security or it's going to be something that's traded, if it's going to be in a fund, is it must be a company, or it must be a listed stock. It must be a security that someone has ordained and said, here's the ticker and here's what it is. But no, what we're saying is, here is not a company, it's a project. Okay. And what kind of project is it? It's a project in the non-fungible token space, NFT. It's like you just said, it's not a company, it's a project. Okay. So what would it take? Let's just use this as a thought experiment for Pudgy Penguin, the company, to get all of its S1 filings in order and take its march and do the right thing to then be launched on, you pick it, the NASDAQ, you want to put it on, pick your exchange, and you're going to get the ticker, Pudgy or whatever. And now it's a real company. And now we have a real stock, a thing you can go buy in it. And then someone somewhere might say, hey, there's this company called Pudgy Penguin. There's another company called Yuga Labs, right? They do the Bored Apes. And there's another one. And we're going to take those 3 stock ticker companies and put them into an index, right? Just like you would do for, say, you might put Berkshire Hathaway and a few others and put your stocks in an index. And now in a basket. And now I'm going to buy a basket of those stocks or securities or bonds or whatever they got coming out. So what we're saying, though, what I'm hearing you say is, now no one has to actually go to the trouble of making these companies real. What we're saying is, if I take Pudgy Penguins, the NFTs, and then I go get the Pepe Frog NFT and I go get the Bored Apes NFT, I could effectively put them into an EFT product that is a basket of NFT projects, but that are themselves not companies, but are also securities. Help me understand this, because it feels like we could put 1,000 of these into a basket and sell an index of meme NFTs to someone.
Derivatives on derivatives.
But where does it end?
I don't know. I'm reading here from Decrypt. This is from Matt DeSalvo. Canary Capital seeks SEC approval for ETF holding Pengu and Pudgy Penguins NFT. Pengu is the token. Crypto asset managers continue to bet big on altcoins, with the latest exchange-traded fund issuer Canary Capital seeking regulatory approval to list a fund tracking Pudgy Penguins, a fund that will hold both the token in question and NFTs from the prominent Ethereum NFT collection. So it's like they're taking their, quote, assets that would be the hardware and the software of a company, in their case, this kind of art NFT and the token that they issued, putting them together as now you can go invest in and buy. But yeah, if you needed to put a big basket of NFTs together real quick and start making purchases so that we had some assets on the book, some digital assets, better yet, it seems like we're cooking up here a nice big old basket of penguins for the US, and maybe with Michael Saylor's extra Bitcoin laying around. I mean, you start to piece it together, and we called this of, not only is the strategic reserve angling straight towards Bitcoin, Michael Saylor now hitting the 500,000 Bitcoin mark, but they're talking about other levels of digital assets. We called this on the show that there would be these varying levels of financial fluency, if you will, like Bitcoin reserve for the highest, utmost banking transactions, a reserve asset. There would be Solana, maybe for government, or Doge for government efficiency. Solana over here in medical records, maybe, I don't know, DMV records. On remember Avalanche got in, right? So now all these other projects piling in, there will be a third tier, maybe a legitified meme tier, the penguins included. The
Well,
penguins, the apes, the lions, everybody come into the big old basket. Could basically call it Noah's Ark or Trump digital asset reserve.
I like this one. I like where we're headed with this. But so the thing about it also that is slightly, it's not disturbing because it also seems obvious, is that a number of the NFT collections are run on. So everyone, we talked about how this is all going to go to be on chain. All right. But maybe we're not going to even say the words on chain anymore. We don't really know if we're at a place where, if this notion of the blockchain is something that will crack through, I think, the common parlance, something that we will say out loud. But it should be noted that a lot of these NFT projects, and certainly a lot of the meme coin projects, it's a differentiation that's very important. I think you said it really well, which is these tokens, that the currency is the value that's going to be powering these blockchains, these projects, but the NFTs themselves are the art, they're the creative. How many are on the Solana blockchain? It turns out the Solana blockchain has most of these ones that are being spoken of in the press. So whether it's the OK Bears, whether it's the Pudgy Penguins, whether it's, I want to say the DGen Ape Academy might be on Solana. There's a number that are very popular, famous NFT collections that were really famous a couple years ago in the summer when it was really the NFT pop kind of went quiet. But now that everyone's best friend, Mr. Andreessen Horowitz, is invited to the Oval Office regularly and recently launched a meme coin called the Trump coin on, wait for it, the Solana blockchain, you could imagine if Solana blockchain is an analog for the New York Stock Exchange. What if Solana blockchain is an analog for NASDAQ? The Solana blockchain itself is like a traditional exchange of value in the sense of like the way that New York and the way these countries view our Wall Street. Then you could say every coin and every NFT and any project that's on the Solana blockchain is like a ticker that can be bundled into a basket. So if Donald J. Trump, who today, I don't know if you caught this, Michael, tweeted that the Trump coin of all the meme coins is the best one. The specific tweet was the Trump coin of all the meme coins, which we've already established we're up over 11, 12 million, is the best coin. And it raised the value of the Trump coin by 15%. So now what would stop someone from saying, hey, Michael, I have something for you. It's called the Solana Meme Index. It includes Pudgy Penguins. It includes OK Bears, and a little Melania's in there, maybe a little Donald Trump. Got a little of this in there. We have all these nice assets in there. Is it Berkshire Hathaway that's at the tip of your spear? Oh no, it's the OK Bear. But then what else do you have in there? What do you have? Any American gold futures? Do you have any like treasury bonds? No, but we have some DGen apes, and we also have some med labs, or we have these random things that just happen to exist on the Solana blockchain. What I'm trying to paint a picture here for everyone is that we're not talking about derivatives on derivatives. We, and I say we, the American innovators who are currently in power, have found a way to create a derivative version of the New York Stock Exchange in its totality, a derivative version. So if you want to invest in alternative products, you can. It's not 1, 2, 3, or 4. It's hundreds of thousands. It's all of them.
Look, GameStop was the one, I think, for me, where that finally clicked, where they were putting GameStop on Ethereum, in this case, not Solana. But, what Roaring Kitty is doing to the markets and sort of creating not just that you can own a stock in the company, but you can own a stock trading the company that can still impact the actual stock of the company. I can't even make sense of it, but other than the point of, yes, these derivative markets are now real. Cryptocurrencies get legitimized when there are all of a sudden ETF filings, and when all of a sudden there's going to be a basket of digital assets that real publicly traded companies might want to invest in, whether that's from Bitcoin to OK Bears. They're going to have options. Michael Saylor reaching for the top, but you just never know what kind of IP a company might want to invest in. It's very weird. I mean, all of that off the top here is the market of deregulation, the Wild West that is now happening. That is I believe, I mean, we talked about this coming out of South by, but it is going to come back around, I think. Maybe just in time for summer. Maybe here's another prediction. March, April, May, like you go on this narrative another 3 months, you're going to come back around to the American worker saying to themselves, why can't I do one of these tokens? When can I launch my coin? How easy is it? I can fractionalize my own work, my audience. I can monetize my impact. That creator economy, I think, was the original spark of the NFT summer. I just wonder if it'll come back around, if people start to see that, or do we just get a bunch more rug pulls? We just get a bunch more scam artists coming back in.
I think that the question we should ask ourselves is, and this is that we've all played games growing up, right? We've all played board games, we played video games. I would say that Generation X, we're the ones who grew up with batteries not included. We're the ones who are writing and gamifying our own life and trying to write the instructions at the same time to our greatest benefit, right? This is what the hallmark of our generation, or my generation, certainly. And as we get to a place where more and more young people today have entrepreneurs to look to. When I was growing up, you didn't, right? When I was growing up, it was the boomers who told you that working at a company and getting an office with a door with your name on the outside was the end all be all. And there wasn't a sense of, yeah, anyone can just start their own thing. Like that didn't exist. But today, there are plenty of influencers and marketers and entrepreneurs you can point to. Young people today in high school can say, oh, college isn't always the path that I can take to finding my solvency, to finding my way to succeed in this world. So what do we look to now in our government? The government is basically saying there is going to be the Wild West rush that we had experienced in Web 1 and Web 2. There were rushes and everyone felt them and everyone felt good about them. But what have we not really had? We haven't really had that same feeling of that rush of Web 3. The Web 3 rush, ironically, felt like the most clandestine and the most dirty rush in technology, because at every step of the way, people were being shut down, arrested, sued, crushed. Innovation in Web 1 and Web 2 were flourishing. And then Web 3 came and everyone got scared because they started asking you questions on your tax forms. Remember years ago during pandemic, have you ever owned, sold, or purchased a digital asset? Yes or no? 2 little boxes.
Oh, what?
What are you talking about right now? But it was this fear. We talk about FUD, fear, uncertainty, and doubt. What was the hallmark of Web 3? Pure FUD. No one knew what was going on. You were blindfolded. You were tied up, you were thrown into a dark room, and so there was one door to let you out, but all the other doors were going to put you in jail. So you just sat and you just shivered and you just hoped someday someone would tell you, oh, maybe Gary Gensler and the SEC will finally give a ruling that will give everyone clarity to just move forward and to innovate. So that's to say that these things don't come without the gotcha. What's a gotcha, which I think you just might have suggested, is right now, it feels like the rules are being rewritten. The rules are effectively the instruction manual of the game has been taken out of the box, and someone tore it up. And they said, now for the next 3 years and 9 months, we're going to rewrite these rules. And the first rule of Fight Club is the original Fight Club. The first rule of Web3 right now is that there literally are no rules. And you can go as hard and as crazy as you can. But by 2028, when the Olympics come to Los Angeles and whatever administration starts to come in, there's a pretty good chance someone's going to bring the hammer down. So it has that, there's a feeling of the asylum is being run right now by the inmates, and it may be only for a few more years. It just can't continue like this because you can't create derivative NASDAQs. You can't do it. The world's going to crumble under that weight.
I like to think that you're right, that the adults will show up, but maybe that's a good segue into OpenAI and Visa, only to say that I think there was this lot of fear from brands around Web3, and then the crypto narrative really slipping away 2023, 2024, kind of gone through the back half of last year. And now the AI narrative, as it ramped up, right? The two feel very much symbiotic of as the AI narrative ramped up, the Web3 and crypto narrative ramped down. And that's fine, but the two are still been on a collision course, which is in a generative AI world, you need a digital ledger to keep track of all the digital artifacts that can be created at unhuman speed, at robot AI speed. And if you're Sam Altman and you're taking billions and billions and you want to know what's human created, where the value is being created, because maybe you want to create it into an ETF and go trade it, you can't have the AI do that. It needs to be the human so that they can be paid for it, or maybe not. But if it is a human, then we need to definitely scan their eyeballs. I mean, that we got to that. Sam Altman, a lot of people forget the orb was circulating right in the height of the kind of Web3 phase there of go get your eyeballs scanned right at the Apple Vision Pro, and the metaverse was coming and everyone was like ready to enter this metaverse, enter Web3, eyes wide open. Yeah, people were lining up to get their eyeballs scanned. And then there was a lot of turmoil and a lot of FUD and a lot of uncertainty around Sam Altman and the company, and whether or not they were making good decisions for themselves, the business, the nonprofit, altruistic,
Effective altruism.
effective. You knew where I was going with that.
Oh,
Whether
yeah.
they were or not. But the orb has re-entered the chat as well. And so, Sam Altman now partnering with Visa, almost to say that whole Web3 thing just going to fade into the background. But if I'm going to be able to transact in this new generative AI world, maybe again, money is liquid. Transactions are liquid. Who cares whether it's Visa or MetaMask or my Phantom wallet?
Who
cares?
So what that line of discourse leads me to is that are there projects, is there a necessary, I don't want to use the word tethering right now, but is there a necessary binding of Web 1 value transaction in order to legitimate Web 3 technology? And when I say that is we've gone through a number of iterations of trying to philosophically come up with a strata of how to describe the way these things interact. And the umbrella over all the various pillars in Web3 is one thing. But then we talk about the cryptocurrency, the tokens, the value that powers the projects, that powers the AI, the currency that funds this stuff. And it's its own, I think, its own sort of self-fulfilling prophecy, its own circular ecosystem. But those have always run up against challenges. They've always run up against some disconnect with the way that the world really works, the way that consumers really interact, right? The disconnect that is the friction. And we've seen the friction from the weight of the Vision Pro on your head to the friction of just trying to move digital currency from one wallet to another, all these different touch points. So what's interesting to me about what Sam Altman is now doing is, okay, it didn't seem at the time in 2000, what was it, 21, 22, when they said, we're going to put an orb on your desk. And when we talk about an orb, we literally mean it's like a grapefruit sized silver ball that has these scanners. You basically have to hold it up to and put in front of your face. And so it can look into your irises, but at the time, it felt like that was 100% okay, because people had peripherals that they were getting comfortable with, thumbprints and face recognition for Apple. There were clear stations at airports where people were very comfortable leaning their face in and getting their thing scanned. Okay, you're who you say you are, all this stuff. But then the disconnect was when I put my face in the orb, I have to have World Coin, and there's this application, and there's like this friction, as you said, very a simple word. It just doesn't make human sense. It may make all the sense in the world to whatever AI agents are running this thing, but it doesn't. So, well, how do you legitimize it then? How do you make it make sense? I know. Everyone has a Visa card in their wallet. What if the world coin is just an agent of Visa? What if the scanning of your irises it has nothing to do with Samuel Altman or OpenAI? Who's that? But Visa, everyone loves Visa. That's how you took your trip and how you paid for your kid's present that you couldn't afford. And everyone loves Visa. So the like steering into traditional capital markets makes sense. And then the bigger thing I'll just throw to you for a comment is that has there ever been one of these products, these derivative weird things that doesn't always somehow end up coming back to cash? They raise money for AI. They raise money for WorldCoin in American dollars, still tied to the schedule of companies and investors using cash. None of these Web3 companies are raising money in Bitcoin to pull off these new technologies.
They might be. Let's come back to that. I'm reading here from CoinDesk. This is from Ian Allison. This is from today. Sam Altman's World Network in talks with Visa for stablecoin payments. The move will make World Wallet into a, quote, mini bank account for anyone who wants it, according to a person familiar with the plan. This is Tools for Humanity, the company co-founded by OpenAI CEO Sam Altman that oversees WorldCoin and World Network, sent out a request for product form to card issuers. So they literally, the aim is to bring Visa card functionality to World Network wallets, delivering a range of fintech and FX applications, fiat on and off ramps, as well as allowing stablecoin based payments for any merchant who is a part of the Visa network. I mean, it's a mouthful, but they literally bid this out to the card issuers, like I guess MasterCard and Visa, maybe Amex got to throw in a bid there for the pleasure of working with our orb scanning or whatever we want to call it, this world coin scanning orb. And I guess Visa sees the value. I wonder if they see it as the marketing ploy more than an actual, they're not going to have a whole bunch of user adoption. I wonder how many people actually got their eyes scanned.
But see, this is the point that I guess I was trying to make in a very ham-handed way is everyone is trying to catch up, and they have been. We talked about Sam Altman wanting to catch up with Apple. Apple has a lot of Face ID technology. If let's just say that Visa wanted to have a partner to transact value, would Visa would Visa proactively choose Sam Altman's, what was the name of the company you called it? Tools for Humanity. So would Visa, given their own accord, go find Tools for Humanity and then say, yes, we really do need to do a deal with WorldCoin, who has an orb, who is in the business of scanning irises? Because you're talking like so many leaps of whatever, not even faith. It's just leaps of just rational thought. Or would Visa prefer to say, hey, Apple, we know you have all these people staring at their phone and you have face recognition, already have all the data. They want someone to walk up to a Visa merchant somewhere and look at the Visa merchant's orb that's at the store, at the 7-Eleven. And then the Visa orb at 7-Eleven is going to go, oh, Mr. Toner wants to buy beef jerky and some Gatorade on his road trip with his family, which would work. Except that most people just walk up to that same convenience store, look at their phone, double tap the right side and put the phone on the thing, and it transacts the same value using the Visa credit card. So there are so many people and technology chasing this. The fact that this is actually something that Visa is doing shows that yet once it, in a world where Web3 has been completely handcuffed and hamstrung to do anything innovative, as soon as you say regulation is off the table, now
Try
look
some
what
stuff.
now look what we're just try everything you could possibly think of as fast as you can.
I do think that when you said Apple, it seems like they're still in a class of their own when it comes to the moat around the payments rails, the biometrics, and the proof of humanity. And when we started talking about these little fiefdoms, we used to talk about this a lot in Web3, and we would couch it in the using your Starbucks rewards for airline rewards miles. Visa's been trying to do that. Amex have been trying to do that. They've all had these different like interoperable reward systems within the credit card world, but it's not interoperable because it's not on chain and it does have to use their payment rails. I imagine if Visa did go to Apple and was like, hey, just some of that biometric face ID scanning tech, can you share that data with us? Can we match that first party data with our payments data so that we could run this AI bot through everything we know about where you've traveled, what you've bought? And Apple's, my guess is no, you can't. And no, we're not partnering with OpenAI. In fact, we've seen what Sam Altman is trying to do, and we got spooked. So good luck, Visa. You can go partner with them. You start drawing lines around it, and you can start to see some people have a short memory. We're documenting all this in real time, but you'll start to see where those things are not forgotten. Whereas if Apple said no to Visa once, I doubt you'll see any
Yeah.
future integrations. And if they said no to OpenAI once, they're final point on that. Apple's getting run through the ringer right now about Siri and being so far behind on AI. I saw the FUD of Apple has to pay several $1 million fine for misleading Apple Intelligence. My guess is they're still looking around and being like, nobody else can do this thing that they are all trying to do with that giant pear-shaped orb.
But there's another weird factor that I think's at play, and something that we talked about now. Gosh, this goes back, I want to say months, but it might even go back to last summer. There was a moment in time where the former administration, if you remember, was coming after the credit card companies. And it was during the summer of the talk around de-dollarization, that if in the entire kind of pantheon of de-dollarization, of all the different people who are involved in de-dollarization, there are different key bad actors, right? You have the BRIC countries, Brazil and Russia and India and China, et cetera, who are specifically de-dollarizing the United States. Why? Because they are refusing to transact in American dollars. They're going around the rules the United States have set, which is you want to do international business in this thing called Earth, you have to use American dollars. And if you don't, we're either going to sanction you, invade you, or bomb you, basically is how our position in the world, right? For better or for worse. So there you go. No, don't de-dollarize because that's bad. So then who comes into the crosshairs? Visa, MasterCard, Discover, and American Express. Why? Because they have unchecked since like the 60s and 70s, given Americans this thing, credit card, that allows them to fabricate, to manifest value in American dollar value, but they themselves are not American dollars, right? They're Visa dollars or MasterCard dollars. They're future dollars. And so when they got under that heater, there was this talk like, we're coming in and we're going to start really looking at Visa and MasterCard. What is your actual business model? How much money do you scrape every month just on late fees, just on interest charges, on overages, on misuse of our platform? All these things that American citizens, you hear people getting buried in credit card debt. We talk about it all the time. You get into it, you can't get out of it. These companies are acting in a malicious way. How could it be 24% APR? Oh, because you get airline miles. Oh, and all the tricks, right? Capital One comes and tries to say, what's in your wallet? Only our card. We don't have these rules. We don't have these things, but they still have APR over time. They're still going to charge you effectively a high priced loan for these short-term lending patterns. they were under so much scrutiny that they got themselves wrapped up in all kinds of crazy alternative deals. These card companies were trying to find out ways to sell off certain smaller parts to basically create, hey, we got to break up the monopoly, right? We can't have a monopoly, a 2-card system. There should be a way to have a local credit card that just runs off of the Visa backbone, the same way that you might have a local telco run off the backbone of Verizon or of AT&T. And I'm sure you had fire drill after fire drill for the last year because we're coming up on the summer. And then, gosh, all of a sudden, everything just changes in January. And suddenly no one's talking about de-dollarization. No one cares anymore. But we see articles like this hit, which are some poor saps at Visa and at MasterCard or whatever had already been barreling down a road to make some ephemeral regulator happy that literally now has been fired by Doge and no longer has a job. And so we're seeing these articles come up where, yeah, you think Visa really thinks the future is putting a grapefruit sized silver ball on some people's desks and making them put their face in it every day? You think they really think that's the future? No. But a year ago, they thought that if they didn't do that deal, that they were about to get under an anti-monopoly DOJ thumb, the same way that Google and Microsoft have been.
And
we're seeing shakeout, late shakeout.
I think that's right. If late shakeout, you get to a point here where you do get capitulation in the markets. Maybe that's why there's a lot of volatility. You're hearing a lot of FUD. You're going from World Coin back to Tesla stock. You're hearing a lot of that craziness in the markets. I say tune it out. Sailor's buying bags. He's crossed that $500,000 mark, or 500,000 coin mark. I don't even know what the value of it is. The only one that sticks out to me, and then we get some closing thoughts here, that doesn't really line up in that narrative, but maybe it is. It's just the show of that shakeout, which is this 23andMe filing for bankruptcy. Talk about like first party data. Talk about biometric data and the value that it has and the power of that data. If Apple's scanning faces, 23andMe had literally your blood type for relatives you didn't even know existed. And now all of a sudden they're going bankrupt. I mean, is it just poor management, or is there a data shakeout there in play? Who's buying the bankruptcy, buying the data on sale?
Who's buying the data and who's buying the debt? That's the questions I would ask. But no, so to get back to that Web 1, Web 2, the innovation pouring gas on the fire, and now Web 3 being curtailed and now finally being released again. Look, 23andMe might be the quintessential example of Web 2 tech, right? Web 2, what was the hallmark of that? It was about user interaction with brand content. Web 2 was Yelp reviews. Web 2 was YouTube. I want to upload my user generated content and I want to have that become the new collateral, the new value. 23andMe was like, to me, for those of you who don't know, 23andMe was a company started by Wojcicki, the former, I think, ex-wife of the founder of Google. She was like a longtime Google executive. And the whole notion was you can get your DNA mapped. It's the ultimate user-generated content sample. And how do you do it? It seems a little crass, but you just spit into a little test tube. You send it in and they look at your DNA and they map it around and they give you these cool little charts that show you that everybody came from the same place in the world some time ago. I'm not going to say it's Theranos related because a lady from Theranos had a similar thing, like one blood drop tell you everything. This was one spittle in a thing tell you everything. This, I think, are the dangers of going too far in your respective kind of era. We're going to see the 23andMe of Web3 coming soon. I mean, honestly, we're talking about WorldCoin and Sam Altman's orb scanning eyeballs. To me, that is a 23andMe moment. This idea that you're going to manufacture an entire process to do something that is of questionable value. I can't believe they lasted this long, to be honest. I don't know if you ever bought a set yourself or a kit or gave it to anyone, but what it comes right down to is you're only as good as your data security. And what brought them down was that they had a breach and hackers went ahead and got millions and millions of people's DNA records, which sounds bad, but I mean, I suppose I would want someone to steal my DNA record before my bank account and social security number. I guess. I don't know. It's a question of if data is data, do you care if any of it's stolen? And then that's a philosophical question. And as I think on it, I think, yeah, actually, I would be okay with people stealing my DNA data. I think I'd be less okay with them stealing my seed phrases to my cold wallet or my social security number or maybe even my birthday. I don't know. Where do you fall on this one? It's weird
Well,
data.
I like to hear that we're going to see the Web3 version of 23andMe because that to me means self-custody of my health and medical data, of my financial records, of my private data, and that whole education around self-custody, what it means to have true dual control over your own data, and what that actually looks like in a secure enclave stored at the edge of my Apple iPhone 16. I don't know. But yeah, I do think you'll see a new wave of decentralized data companies that could basically recreate that model, allow the users to store it in an encrypted blockchain capacity, and therefore you decentralize the risk. You file an ETF and you pump it out on pump funds, and now all of a sudden you've got the Web3 23andMe. I mean, I joke, but I think that's the kind of economy, a tokenized economy that can start to evolve where you can be a part owner in the company, or you could be a user of the company, or you could be both. Closing thoughts as we round out March Madness here.
Mike, I'll give you my closing thought and I want to hear yours. My closing thought is if 23andMe had a little bit more perspective beyond the view in between their eyes and the front of their hand, they might have figured out a way to have tokenized or created an NFT for every single human who submitted spit to create a unique digital asset that you could own. And then you might be able to even have fractionalized ownership of ancestors and future children in this sort of DNA, this on-chain DNA play. Maybe 23andMe with just the UGC spit was 10 to 15 years way too early. And we're about to see yet a new company that comes on chain and really does think about how does someone either own or fractionally own part of their own or their family's life. And then you start to think about generational wealth. I'm talking about generational ownership of data. I think that's where they might have missed. They were just too early.
Or somebody's buying all that generational wealth on sale as a bankruptcy. Don't rule that out. Of all of a sudden that data is still there. It may have gotten hacked, but there's still some value that could be somebody scooping it up on the backside. I can't wait to do it again. Pay attention to the regulatory markets. If Trump is saying that his meme coin is the best, you better believe that price is going up. It's all financial advice now. We'll do it again next week.
Talk to you next week, Michael.
Later.
That's all the time we have for this episode of Off the Record, On the Rocks. You don't have to go home, but you can't stay here. See you next time for more news and all things crypto and Web3.